Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this first full trading week of January 2024. And this week is been quite nice, quite in the green, and regaining some of the losses that we had the previous week, in which we amounted a lot of red days after red days after red days. This week is the other way around. We started Monday without news, Tuesday without news, Wednesday without news. Everyone was watching Thursday and Friday for the big data, CPI on Thursday and PPI on Monday. And overall, the market started to rip on Monday. On Monday, we got a big, huge green candle. On Tuesday, we got continuation. We stopped a little bit on Wednesday, and then CPI came out on Thursday saying basically that be careful with your expectations because headline inflation rate year over year got higher, 3.4 instead of the 3.2 that we were expecting, an uptick, but way higher than the a little bit of uptick that we were expecting, way higher, 3.4 from 3.1. This is December, remember. This is the last month of December in which Christmas took a hit on inflation. So month over month also showing an uptick, 0.3 instead of 0.2. So markets were expecting an uptick from the previous one. But the only thing that it's maybe the light at the end of the tunnel is that core inflation rate month over month got flat. 0.3 instead at 0.3. But year over year also an uptick, not from the previous one, but from the consensus. We were expecting a little bit of decrease from the 4% to the 3.8. We got 3.9. So overall, inflation is still going up. Core inflation, excluding food and energy, it's slowly going down. But I think this is a big miss on the markets. We are going to see why the market sold off on Thursday. This is why, basically. And I think then we got the famous B reversal at the end of the day. So let me just explain why I think that happened. And I think that was a speculation for the bank earnings. I'm going to review the bank earnings just in a minute. Let me just finish with the week. On Friday, we got PPI, and these were pretty good news. Minus 0.1 month over month, the same as the previous one, and the consensus was also an uptick. So this was a pleasant surprise for the markets, and core PPI came out at 0% instead of the 0.2%, also expecting an uptick. And I think this was a decent number on Friday, but coupled with the fact that inflation on Thursday showed that it's still strong, and that in terms of earnings, we got JP Morgan, Bank of America, and Wells Fargo. So these banks reported earnings on Friday, and with the PPI number, everyone was a little bit more bullish than Thursday. But let me tell you, numbers are not good. JP Morgan fold a lot. Profile falls 2.9 billion due to the rescue on other regional banks from JPM. Bank of America fall after companies report lower forecasted profit. So let me just show you some numbers. 70 cents versus 68 and 22 billion of revenue versus 23. So a miss. JP Morgan, look at this, 3.04 versus 3.32 and a little bit higher on revenue. And finally, Wells Fargo also post higher profit, but I think this is just a case of every other bank, the bigger banks are in the red. Let's just hit Wells Fargo. 1.29 versus 1.17, that's a big earnings EPS, and 20.88, 20.30, that's also a good revenue. But as we are going to see on the charts, I think that got hit due to sentiment on other bad earnings from JPM and Bank of America. In terms of the path moving forward, markets are still expecting aggressive interest rate cuts. On January, we are going flat, and then starting in March, 25 basis points, 25, 25, 25, 25, 25, and 25. These are 7 rate cuts in a year. 1, 2, 3, 4, 5, 6, 7. Each of them 25 basis points. So every single FOMC meeting in 2024, markets expect an interest rate cut. I really doubt it. I really doubt it. So these are the expectations from the market. Be careful, because every single bit of data that goes out and goes against this expectation might kill a lot of momentum and will provide a lot of volatility to the downside. Be careful if you are long. Excuse me about that. So let's now go to the technical analysis. This is the daily chart. We are going to start here. This was Monday, Tuesday, Wednesday, Thursday, CPI day, and Friday. So markets really don't know what to do up here. But the most important thing for me was watching this daily gap that we were putting down in the previous week. And we started, as I was saying, with a big Monday. This was the first 4-hour candle on Monday. Unbelievable. Look at this. All these people short at the bottom got squeezed out. So the Monday provided a lot of opportunities, but it was quite unexpected because there were no news, and Thursday and Friday were big days. So everyone was just, okay, let's see if it has continuation. On the 1 hour, we can see how the market started to set up into the end of the week. So this was the first squeeze on the 1 hour during pre-market on Monday, and the squeeze went on and on and on and on until the first 1 hour fair value gap got hit. And here we just rested for Tuesday. So every single 1 hour candle on Monday was green. Unbelievable, right? Sometimes this happens. So after this, I was watching for this 1 hour fair value gap inverse that at some point I think was going to be tested. So on Tuesday, we got certain really big trades down here, and then we consolidated. During pre-market on Thursday, a little bit more consolidation, and then we hit this 1 hour. And this 1 hour was run through at the end of the day. So obviously, if you check my videos, I was watching also this last bit and all this liquidity that got hit here on Thursday. But on Thursday, you have to be really careful. Let's see how the market reacted to the CPI number, because it was a beautiful manipulation move. All these people here short, the move up, the move down on manipulation, and then the squeeze higher into a dump for the CPI number. So look at this dump. So from the highs to the lows, and at noon, we got the big push. This was quite unexpected. I was not trading during the afternoon power hour, but look at this. I was analyzing and really watching this. What happened here? But I think it was everything speculation for Friday's bank earnings. So let's analyze the setup for Friday that I think provided me a couple of opportunities, good opportunities to trade into this chop. I think you see this chop, right? But I think there were plenty of opportunities. Let me show you how I set up my trades for the end of the week. CPI day, I didn't trade, I just trade on pre-market. But Friday, I really had a couple of good trades. I think I took 130 points out of the market. That's pretty wild. And let me show you how. This is the 30-minute fair value gap with also a confluence on the 15-minute fair value gap down here. Look at where the market bounced off from when on CPI day, and we got squeezed. So this is the first sign of perhaps we are going bullish. So into Friday, two more fair value gaps, this and this one. So both of them, I was using feed retracement to really see if we were bullish or not. The first feed retracement goes from down here to here. And as you can see, I'm using the 50% feed retracement with this golden pocket in between the 61.8 and the 65. That's standard procedure if you are using feed retracement. I'm not inventing anything here. And let's see the first setup on Friday pre-market, because as you can see, I'm also using feed retracement. Why? Because I saw this manipulation move down here into a push. It did not provide fair value gaps, in here, so I was quite hesitant. So I was just watching this move up to see where we stop. I marked this liquidity, we got rid of this liquidity. I marked this other liquidity, we got rid again of this liquidity, and then we had the move down. So this move down, this displacement, I took note how. This is the low of the feed retracement. Sorry, this is the low of the feed retracement, and this is the high, standard, the same, and the golden pocket. So I was watching this fair value gap, and basically the trade came to me. I was long here on this order block with the stop at this level down here outside of the fair value gap. Risk-reward ratio 4.36 and ratio 4.36 and target 30 points. This move up here, and I got it. Really nice. And then we got their displacement again. So I was expecting this to move higher, but my first target was here. Don't be greedy. And this was just, okay, market don't want to go higher. So let me see what it wants to do. So it wants to get rid of this. So these guys got stopped out, and then we got the big displacement down into the PPI number. And this was the really big trade. Look at this. Big displacement. This is the green line. This is the feed retracement of this move. So markets move either for manipulation or for equilibrium and balance inefficiencies, fair value gaps, into standard discount areas like the 50% feed retracement. And this was both of it. This gray area is a fair value gap. This was the 50% feed retracement. The only thing that I was missing was a fair value gap in which I could manage my risk. And I was watching this and I was saying, oh boy, don't chase it, please, don't chase it. So then it went down, and then I saw this pivot. This is not an ICT. An ICT trade is just a little bit of pullback. The only thing that we got was this order block, and I was just doing that. So enter here, the risk is below the order block, 9 points of risk. Or how? For what? So all these people, this liquidity, this liquidity, all these people that went long into the hole, my target was up here, and that was 55 points, $1,000. Risk-reward ratio 6.14. Why? Because we were going into the CPI. I think this was a manipulation move for that. So big green candle into PPI, still pushing higher, and then we touched the infamous blue dot line, last week high. We touched it up here. This was last week high, and then we dump. we dump. And we dump pretty heavily. Look at the gaps that we left behind. And everyone was being respected. This is the first one that was respected. All these people were short. So that's why all this choppiness, I think the shorts got it on Friday. PPI was good, but what caused the market to not continue higher, I think, was the bad earnings from the big banks. So what do we expect for next week? So let me just clear this inverse fair value gap and all the liquidity that was taken, because I think for next week we might expect a little bit of push. This was nice. I'm gonna keep these two. So basically, remember that we got the move down and then a move up, and we are destroying all the shorts in here. So we are bullish. We are not, if you see how we are pushing higher, the only fair value gap that we are leaving behind is this. This is a possibility. So watch this daily down here. But market in terms of daily time frame, it's been quite efficient with these weeks, not leaving behind any gap. So in the 4-hour, we have this that got tapped. This is the same one that we used to really be bullish on Friday. We have this 4-hour that we might retest. This is interesting, but I really like to go for the 1-hour because the 4-hour perhaps is too higher time frame. And I think our best opportunity is to have either this as support higher or this one again. If we don't hold Monday these two fair value gaps and we do something, for example, like, let me just show you. This would be really bad. We take liquidity up here, we don't continue higher, and we start moving lower. So that's when you have to really change it and adapt your bias into the bearish side. If not, if we push lower and we found support in these fair value gaps or even this one, this might be a little bit harsh for some people, but we'll have to see more structure here. So this is the expectation, the forecast from my side. Why? Because we are still looking for this liquidity. This liquidity is on the ongoing, on the continuous chart. Remember that we are on a daily fair value gap. We were there. We are now consolidating below there. We have all this liquidity sorry, up here that if we want to push into all-time highs, we have to get rid of. So pretty damn interesting week for next week for sure. Let me just adjust some of it also. So this is my analysis for the next week. We are still bullish. This week was quite bullish. We are consolidating, and if we respect the pullback on certain fair value gaps, I think the liquidity around 17,200 is going to get destroyed. So what else? In terms of the individual tech stocks, Apple bounced a bit from where? Well, quite easy to see. Fair value gap and the 200. The white line is the 200 moving average, simple moving average. So we got the bounce. We got a close up here, and we have to see if it wants to clear the gap or not. Microsoft is doing quite, this is epic. Look at this consolidation, breakout candle into all-time highs. So Microsoft is super bullish, super bullish. This is the new all-time highs. This is a preview all-time highs that we are holding. We are closing above it. So this is accepting the new all-time highs. And after this consolidation, I can see Microsoft moving to 400 for sure. Tesla is just being destroyed. Why? Well, because it's cutting production, it's halting its Germany production line, it's having issues with strikes. In terms of investment, Tesla is not your best vehicle for investing on tech. You have Apple, Microsoft, Nvidia, Amazon, and Tesla is just feeling the pain. Feeling the pain. Amazon, how is Christmas going? Well, we closed the gap. We are skyrocketing. We are leaving behind this little gap. Just put it here. And we are closing above this line and we are going towards April. So Amazon is quite bullish. Google, a little bit of rejection up here on this pivot. Do we have something interesting here? No, it's just a big dump on earnings that we got here. So basically, be careful with Google. Nvidia also, look at this move. Nvidia just pushed the tech stocks, pushed the Nasdaq into all-time highs, and we got new all-time highs for Nvidia. So let me adjust here, and same as Microsoft, we are holding the all-time highs. We are, look at this strong Monday on, holy, wow, unbelievable. Nvidia is pushing 553. So all-time highs, blue sky, we have no reference. So this is capable of anything. And finally, Meta also pushing higher. Quite interesting. Do we have any levels in here? Yes, we have. Let me just chart this real quick. Yeah, this is the target. September 2021. So this is the target. We can clear this. We can adjust the pivot to really see if it holds. But I think everyone is bullish but Tesla and Google. That's why we have this big momentum on the Nasdaq. And also watch dollar, because dollar, I'm really watching carefully because look at this consolidation. What it wants to do here. We got this close, this area that is being rejected. This is not common. Look at this. Everything is being held here. So what dollar wants to do really will affect the equities market. So watch dollar. If we do this, the equities will suffer. If we pull back and continue lower into this low down here, oh boy, I think all-time highs is at reach on the Nasdaq and the S&P. And finally, the Russell. The Russell pulled back a bit. It's just consolidating here. I think we are on a spot in which we can still be bullish. And watch this gap. This gap is if we go through this gap and continue higher, the S&P will be strong and the Nasdaq will be even stronger. So I think this is the key to really start seeing earnings continuation, because I think it's quite important to really see if the earnings are there or not. Let me just search real quick. That's for 15. Sorry, I didn't prepare this. This is the earnings for next week. Wednesday, Goldman Sachs, Morgan Stanley, First Bank. So these are your, before the open, your spots, your focus. Charles Schwab, Texas Capital Bank. So more banks next week. Watch them, because if we pay attention to what is happening on the banks and how they end up, this is XLF. We are just holding up here, waiting for their earnings. This is the XLF sector. And as you can see, the biggest 3 US banks closed deep in the red. And look at the rest. KRE -1, MTB, CMA, World Bank. I mean, watch the banks, because their earnings will affect this overall sentiment for the Nasdaq or the rest of the risk investments that everyone is watching. So I think we can be bullish, but we have to respect certain fair value gaps on the Nasdaq, and we have to watch dollar as a refuge of the investments. If dollar goes up, be careful, and also watch bank earnings next week. If we continue seeing bad earnings, be careful because we might see a push to the downside and a rejection on the equities. So that's all from my side. As always, if you found this video useful, please give it a like, subscribe to the channel because I upload these weekly recaps every Saturday for the recap of the week, going from the fundamental of the weeks and also the technical analysis for each of the day, forecast, analysis of other markets. So if you really feel that this is your thing, I think this content is really helpful and valuable for you, and please support the channel by liking, by subscribing, and don't hesitate to put down below some comments if you want to see some other content in this channel. So as always, discipline, risk management, patience are key for your success. Stay safe, everyone. Have a nice weekend, and remember that on Monday we have an early close, so I will be back on Tuesday. So until then, stay safe, rest a bit, study, analyze, do your work, and let's see some opportunities next week. See you then.